Well, just as concerns over inflation seem to have dissipated, the threat of oil supply issues comes looming over global equities. Well, here to share with us his views, we have Matt Cabangon of AAA Equities. Good morning, Matt. Now, let's kick off with that big news on that oil issue in Saudi Arabia. How bad is it going to get?
Well, right now, we're looking at about 5 million barrels a day of supply being affected. It's not clear yet how long this damage to their plant will last. And another question is whether this is a one-and-done scenario. Could the attacks happen again? Could this be a recurring thing that we'll be seeing as tensions escalate? So it could range anywhere from about a month or two of disruptions to something that we can see for a prolonged period of time.
Okay, but these attacks have been happening apparently. This just happens to be the biggest attack that we've seen since, Saddam Hussein, even in the Gulf War, they mentioned. But they do say, the U.S. is saying that they can, help with the supply and there are enough reserves in the global market. So are you worried that they didn't have precautions ahead of this?
Yeah, you're absolutely right. Donald Trump just announced that they're willing to tap the emergency petroleum fund that they have. But right now, there is no signs yet of a shortage, right? We're coming from a global oil glut. So we're not in danger of really seeing a crunch for oil yet.
Okay, so not yet as worrying as it had been maybe in 2018. So do you think that markets, however, will be reacting to this as just a knee-jerk reaction? Maybe, the prices might be coming down. It actually seems to be coming down slightly as we open. But will the markets be having a severely negative reaction this week on that?
Well, really, this is the first time that we've seen oil markets react to geopolitical tensions in a long time. It used to be the biggest driver in this market, and suddenly we've seen this just come back with this attack. So really, I expect markets to fade this move, especially as we see more information come out. Right now, local sources in Saudi Arabia are saying that the situation has been contained. Whether or not that's true remains to be seen. So it's a wait and see in my book.
Okay, so wait and see on that. Now, you were mentioning that you're looking at Petron right now. Is the stock something that reacts very quickly to something like this, especially since, they might likely have, months of supply nevertheless, so it's not necessarily affected tomorrow. But is this stock something that will be moving because of this news?
Well, really, Petron, as a stock that hasn't really seen a lot of love, at least for the first half of the year, could see actually a bump higher off this news. They are carrying quite a large inventory, so they might be seeing some inventory gains as the price of crude oil pops higher. So,
is this something that they can very easily pass on to consumers?
Well,
the spike in oil prices.
At the pump, yes.
Yes.
So this is something that they can pass on. Really, the benefit for Petron here is carrying the inventory and marking this to market. So this looks good on their books. And of course, the higher cost of petrol in Saudi Arabia is passed on at the pump.
Okay, so Petron actually, let's see how that will open. It's opening now up by 7 7/10%, just as we speak. Very interesting opening there for Petron. Other stocks or sectors that might be moving because of this news? I mean, you've got transportation probably, suffering here a bit, and also industry. Anything else you're watching out for apart from Petron?
So really, I mean, Petron's a big beneficiary, but let's look at the losers, for example. The most obvious losers will be transportation, so Cebu Pacific, for example, Philippine Airlines. Their biggest cost is naturally crude oil.
Yeah.
Now, the question is, on a per-company basis, whether or not they've hedged this ahead of time. Given the downtrend that we've seen in oil prices before this weekend, they probably haven't.
Haven't they learned their lesson from last year with those spiking oil prices and Cebu Pacific having had a really bad bottom line because of those issues?
Well,
do you think they're better positioned this year to take care of this sort of news?
Well, they should be.
But
it's hard to be hedging against a falling market.
All right.
They might have done it to a certain extent, but maybe not to the percentage that they should have. Maybe a 10% hedge, a 20% hedge. But given one-off events like this, it really will hurt them.
Okay, but Petron, before we move on to just changing the stock here, Petron spiking by 7% at the open. Let's take a look actually at how Cebu Pacific is performing here. As you mentioned, they might be one of the ones biggest hit, at least on a knee-jerk reaction basis. But you did mention that possibly some hedges also possible there. They are, as you expected, slumping by 3.4% on the back of this news. Now let's keep on the inflation talk here. There's another issue here hounding at these domestic markets, and that's this whole pig swine issue. Again, something that was not necessarily expected, but something that does happen once in a while. Are the companies, the food companies, cushioned for this kind of things?
Well, the biggest company to be affected by this would be Jollibee, for example.
Mm-hmm.
They're caught between a rock and a hard place.
Okay.
Their gross margins are about 16%.
Right.
In China, we've seen, if we were to use China as a comparison,
okay,
they saw chicken prices rise by about 13% year to date.
Okay.
So if a similar thing were to happen to Jollibee, to their most
Right.
consumed food item,
How elastic are the prices of Jollibee? I mean, can they just increase the prices of Chicken Joy because everybody knows that the prices of poultry have increased?
Right, well,
and would that affect consumers at all?
Well, here's the problem with Jollibee raising prices at this time of year. Seasonally, Q4 is always their strongest season, given that it's the holidays.
Right.
So either they swallow the hit on their margins on chicken, or they sort of raise prices just
Right.
in time for their strongest time of the year. So it's a lose-lose situation for Jollibee in this case.
Okay. You don't think that they have enough market clout to actually be able to raise prices, especially since it's Christmas, people want to spend to eat out anyway. So will they actually get through this period?
Well, the question of whether it's, you make up a good point that it might be market inelastic during this time of year. So that's a wait and see. It's wait and see.
Okay, so to wait and see. But what about these two other stocks? You've got San Miguel Food and Beverage and Vitarich that some analysts are saying might actually benefit because they do sell chicken. Is this something to be watching out for here? But they are actually opening both in the red this morning.
Again, Food and Beverage, they produce, if I'm not mistaken, they produce more chicken than they do pork. So the losses in pork should offset
The chicken.
the chicken, yeah.
Okay.
So
you're expecting, benefit from this whole swine flu issue on these kind of stocks?
yes, they both should benefit, but again, there's still not a lot of transparency from the DA about how widespread this swine flu has already gotten.
Okay.
Right now, we have some anecdotal evidence across central Luzon, but whether or not this has become a widespread epidemic will affect how high these two stocks can go.
Okay, which now are actually correcting a touch after all of these news came in. Now let's move on to policy and the index on the back of these possible inflation woes. Do you think that, the governor had already mentioned he's going to take into consideration this whole oil issue on the next policy meeting? Is there even a possibility they'll cut the rates even further because of another threat, looming threat to inflation?
Well, I'm personally of the view that at the next meeting, we're going to be seeing a cut from the BSP.
Okay.
Just by virtue of the Fed meeting this week. Typically, the BSP follows suit to the Fed, and the Fed is basically locked in to cutting this Wednesday night.
Right.
So we should see the BSP follow suit the week after.
Should you be expecting more cuts because of this issue? Or do you think that they'll be sticking to their guns and saying, okay, we're going to stick with the 25 bips cut?
Oh, I don't think they would dare cut more than 25 basis points.
Okay.
Especially now with the threat to inflation. So I think the risk now is, I think the risk they're looking out for is cutting too aggressively.
Okay. Very interestingly, though, as you can see, the index sliding down by 0.2%, 7979.32, with the property space dragging down. We'll see whether this is a reaction to all of these oil issues or, again, ahead of the BSP meeting there. Are you still expecting us to rally above 8,000 this week?
That's the $1 million question. I expect us to touch 8,000. Whether or not we hold that really depends on the outcome of this week's federal policy meeting.
Okay, so definitely a curveball there thrown in this Monday morning. Thank you so much, Matt Cabangon, AAA